Cardano, we've seen all-time new highs, breaking price movements like you wouldn't believe, but are we due a correction? Yes, after every sprint, normally what we see is a breather and a correction. Well, that's what we're going to look at today. Using Elliot wave and Fibonacci, we're going to see what's the high probability outcome before we see the next leg of the bull run. If you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been trading currencies for now 15 years. Featured in the best-selling book, High Probability Trading Strategies, back in 2008. But now I focused exclusively on crypto and blockchain. So let's dive in. So we're going to start with coinmarketcap.com. We've got Cardano up, aka ADA. $2.59 as of today. All-time new high being made. It was all-time high. It's $2.97. Almost $3 for Cardano. That's incredible. Massive surge to the upside. If you don't know by now, Cardano is making the world for the better for all. And they're doing amazing things across the globe with the blockchain. They're doing amazing things in Africa and so on and so forth. Brilliant vision. They've been doing amazing tech development. But what we want to look at today is the technicals, the technical chart patterns that let us see what is likely to occur next. So we did this count a while ago and said, look, Cardano looks like it's done a nice 1, 2, 3, 4, 5 to the upside, a nice correction. So this is the macro count. So let's just pull this up so it's really clear. A nice wave 1, which broke down to a nice 5-wave structure. We had this nice wave 2, and we pegged this low, right? We pegged this low in one of our previous videos, anticipating this high. And to be totally honest, it was much more bullish than anticipated. Like this part here was just incredible. But this is what you refer to as panic buying. And we want to see what typically happens after this type of panic buying. So we've got this wave 2, and now we are on a wave 3. So we can delete this question mark. Why? Because we have exceeded this former high, which is the major indication that this wave 1 high has been broken. So this confirms the wave 2 low. So now we shouldn't see price go below this wave 2. Now anything can happen, but that's very highly probable. But what we want to look at today is a few things. First, let's jump into a weekly chart. We're going to look at the momentum. Look at this momentum indicator, right? So this high married up nicely with this previous high on the momentum indicator, and then look at the current momentum. This high and what's happening down here with this momentum indicator. This blue line has officially crossed below the red, or is just on that borderline, right? So now we should anticipate after this incredible move to the upside, the market should move sideways to down, right? That's really important information. We're being very objective. We love Cardano over here. We love ADA over here. We love Charles Hodgkinson, who's former co-founder of Ethereum, beast of a project. But now we're just looking at profit-taking psychology of price action using Elliot wave and Fibonacci. And by the way, I've just launched my Elliot wave and Fibonacci masterclass. It's free. It teaches you what I'm showing you, so you can do it in real time, so you can get the valuable information when you need it. You know the saying, give a man a fish, feed him for a day, teach a man how to fish, feed him for a lifetime. So there you go. So now what we want to look at is this. I want a bit of a smoother indicator. Let's go to this setting over here. Just want to get to this setting over here. Right. So we've got this bearish momentum reversal on a daily chart. So what we're going to look at is this a 5-wave structure, and should we anticipate a correction? And if so, what should that look like? Well, what we need to do is jump into a 4-hour chart. So this is a 4-hour chart where every bar represents 4 hours. Why am I jumping to a 4-hour chart? Well, the wave structure is just a bit clearer for me to read, so we can make valuable decisions or important decisions. So this is what I'm seeing from any wave. We're focusing on the pattern initially. We've got this nice wave 1, looks like a wave 2, a wave 3, a wave 4, and a wave 5. Right? Let's just get rid of these waves. This is an intermediate count, bump. Right? That's the structure that I'm seeing. But then look at this structure over here, this part of the market. A wave 5 in itself tends to break down into 5 waves. That is really valuable information, and I'll tell you why in a second. But look at this: 1, 2, 3, 4, 5. We can do one more count because this is also breaking down over here, but this is more than enough information for what we require. Micro, boom, done. So now we've got a wave 5 of a wave 5, right? And now we can make some Fibonacci price extensions to say, is this likely to be a wave 5 high? Keeping in mind that the weekly momentum has made a bearish reversal. That is so key, and we don't want to miss that piece of information because it gives us clues. We're just looking for clues and probability. So let's just click this low. Again, in my masterclass, I'll show you how to do this in detail, so I'm just going to do it relatively fast. Typical zones for a correction, the most common is 62 to 100%. But then we're going to do the exact same thing for this microwave count over here. And when we get a cluster of Fibonacci price, that makes it a very high probability. So now we've got these two very clear price zones down here and up here. And then we're going to just finish off with an external retracement. Right, these are confirming indicators, this particular one. There's two numbers that we want. The key one's going to be 1.618. And we can see that it's been well over exceeded over here, So we don't even need to draw the lower one. And then the same again over here. If we do the same for this wave, typical wave 5 is over here. So we've got this zone. This is a very significant price zone. This here. This is a very significant price zone. A few other things we can do, but this is more than enough information to say this is high probability that we've got a high happening here. And if that's the case, again, just a quick reminder, we've got a momentum on the weekly, bearish. We've got a bearish daily momentum. We've got pattern on two wave counts on a intermediate, which is this 1, 2, 3, 4, 5, and then a micro, this 1, 2, 3, 4, 5 over here. So if that's the case and this high holds, what should we anticipate? Well, the minimum you should anticipate is a correction of 50 to 78.6% retracement. So again, I'll show you how to do this in the masterclass. So I'm going to do it relatively fast here because I want to just give you the key information. 50, 62, and 78.6%. These are the key numbers. I'm just going to drag this across so it's nice and clean. And then what we want to do, I'm going to clean this up as well. So we can kind of, we don't need this information right now. We've got great. Yep, that's great. So keep it nice and clean. All right, and then time. How long does a correction typically take? Well, it takes 50% as a minimum. And we want to be patient because sometimes people act too soon, and a minimum time expectation for a correction will be the 10th of September. 10th of September. Yep, so what I've just done here is, just so you know, I've measured this time. This part's not in the masterclass, so I want to make sure you know it. 50, that's 100% of the time taken to form this wave 1. This wave 1 here, the time taken. And what we've done is simply taken 50% of this, which is around here, half, and projected it forward from this point here. And that's what this blue line represents. And then the typical maximum time is 100%. So we've got this now clean time and price zone. Keeping the chart nice and clean. We can draw it here. How many waves should you expect as a correction? Always anticipate 3 waves. Simple zigzag A, B, C is the most common, and we should always anticipate a minimum. Now it might turn into a complex correction, but typically you'll see an A of some sort, B, and then a C which mimics the wave A, and it will often look like this. And this should coincide with the weekly momentum over here in the top left hand corner going bearish and then oversold and then making the blue line across the red line. So there you have it. Cardano, powerhouse. We know it's a powerhouse project. Beautiful to see this momentum, money flowing into the markets, but speculation is speculation, psychology is psychology. This part of the market is not sustainable. Like, look at this. Look how steep this is. Doesn't matter how great the project is. Look how steep that is. Look how steep that is. Money is going to run out, right? And people that bought in down here, guess what they're going to want to do up here? Well, take profits. And this end of a wave 1, we're due for a correction. Normally it occurs in this, the former wave 4, by the way, this former wave 4. It's quite common that correction actually ends in this range. So we should anticipate at least a correction into this range. So there you have it. Cardano, powerhouse project. We've had a massive surge. Time to take some profits, take some money off the table, fill up those pockets, exercise that profit-taking muscle, and then be patient. And if you haven't bought Cardano, you can be patient. What is the price below below $2. We're anticipating below $2 and as low as $1.45. Just staying objective over here, you know, independent of opinions of Cardano, just psychology, speculation of the markets using Elliot wave and Fibonacci. So if you like today's video, like, subscribe, hit the bell notification. Take my free Elliot wave and Fibonacci masterclass so you know how to do this stuff yourself, so you can do it with all the tokens and everything else that you're looking at. Let's finish on a quote. Let's pick a random one today. Let's go for, all right, here we go. What's this one? All right. There is no right or wrong answer. That's the name of the chapter. And that's important, by the way. In fact, I'm gonna read that as my quote. Chapter 6 is, there is no right or wrong answer. Right? Everyone obviously wants to be right. You want to be right when you're investing. When you're buying, you want to make money. But the game is probabilities, not certainties. And that's, you just have to accept those rules of the game. So there's going to be times where you get it wrong, you take some losses, or you make a small profit, or you break even. And when you get it right, you make a lot of money. And you want to ride those bigger waves. So you just have to make a decision. Hope you enjoyed today's video. I will see you soon.